Hello and welcome. You're watching News9. I am Suyash Maheshwari and this is First Take, where we bring you stories from the world of stock markets over the next half an hour. Now, to my right is Shweta Kothari, my colleague. Hi Shweta, good morning.
Good morning, Suyash. Taking a look at the markets this morning, a tepid start, a flattish note opening for Dalal Street?
Yes, Shweta, you're absolutely right. Indian markets opened lower. In fact, we have seen a negative trend emerging in global equities since last night, as US equities also ended on a flattish note. Now, this was on the back of a fresh spike in crude oil prices, as well as the stronger macroeconomic data coming from the US. Now, in US, retail sales rose about 0.7%. Now, this adds to the narrative that economies continue to be hot, will be hotter over the next few quarters,
right.
And this will also elevate the inflation. So, interest rates are expected to stay elevated for longer. Hence,
higher for longer will
higher
stay.
for longer narrative continues to be there. That's why we are seeing some sort of a correction playing out in the US markets. Now, the trend was also muted in the European markets as well as the Asian stocks. Now, Indian markets, talking about the Indian markets, Nifty opened below the 19,800 mark. Currently, it has retraced those levels and it is down about, on a flattish note, down about 5 basis points or so, and it is currently sitting at 19,805 levels. Whereas Sensex, which opened about 100 points lower, is currently sitting at down 54 points at 66,373 sort of levels. Now, Shweta, the broader markets this morning are buoyant. Small cap index, which added about 0.9% yesterday and has been outperforming both mid caps and the large cap, continues to outperform, and it is up about 0.6% this morning. The mid cap, on the other hand, is up about 0.2% this morning.
And small cap, mid cap, they are outperforming headliners now for the third consecutive session. I remember we spoke to Amrish Baliga yesterday, and he's of the view, stay away from small cap, mid caps. You never know. Many of them have turned multi-baggers, and you never know when the correction happens, and when it happens, if it happens, small caps and mid caps, first ones to take the hit.
Yes, especially at a time of increased volatility, the kind of macroeconomic environment that we are sitting in, the geopolitical tensions that are brewing in the Middle East, also in Europe. So, given the uncertain environment that we are living in, it is prudent for an investor to perhaps look for larger, larger companies, blue chip companies, instead of going for mid caps and small caps. And to Mr. Baliga's point, it also makes more sense to perhaps shift focus to the blue chips company at this point in time, given that the kind of returns we have seen from the mid cap and the small cap in the last 6 months or so.
All right, and on that note, since we're talking about returns, we're also talking about profit, losses, margins. It is the earnings season that kick-started with IT companies. Let's quickly take our viewers through Bajaj Finance, which declared its results late evening yesterday.
Yes, so Bajaj Finance results came out after the market hours, so the stock did not have much time to react to the numbers. The Q2 numbers were pretty much in line with what the street was expecting, although on the profitability front, the numbers came in slightly about 2% below the street's estimates. Now, the consolidated net profit stands at about 3,551 crore in Q2. This is a 28% year-on-year rise. Now, the profit improved on the back of improved net interest income, the improvement in asset quality, as well as a loan book that has also improved. Now, net interest income, which is the difference between interest income earned and interest expended, also rose about 26% to 8,845 crores. This was ahead of street's expectation, which was pegging the number to come in at around 7,208 crore. However, Shweta, the net interest margin compressed by about 14 basis points. However, the contraction overall was, slightly lower than what the street was expecting. Street was factoring in a decline of about 30 basis points.
Okay.
So, I think the higher cost of fund narrative that we were seeing, the impact is not as bad as perhaps the street was
Investors
anticipating.
are not taking very kindly to it. The stock is down about 1.19% this morning. We'll try and get in Kush to understand what's weighing in on sentiments as far as stock impact is concerned.
Yes, I was also actually reading the management commentary. The management said that they can expect a further compression of about 30 basis points in NIMs as the cost of funds will continue heading northward. So I think on the back of the guidance coming in from the management, who expects that NIMs will continue to remain under pressure for the second half, I think on the back of that we are seeing some bit of a correction playing out in the stock prices. And apart from the management commentary, asset quality, Shweta, also improved for the company in Q2. Now gross net non-performing assets stood at about 0.91% compared to 1.17% in the year ago period. Net non-performing assets came in at 0.31% versus 0.44% in the year ago period.
All right, so net NPA is also declining there for Bajaj Finance. We'll try and get a sense of why the stock is not taking very kindly to those numbers, Suyash, from Kush whenever he joins us. But let's move on to VPRO, another IT major, all set to come out with its quarterly earnings today.
Yes, Shweta. So VPRO is expected to report a subdued set of numbers, in line with what its peers reported last week. Now, as I mentioned, we have seen the results from the three big IT companies last week, where we saw that revenue growth continued to be muted, whereas profitability and margins improved on the back of companies, streamlining their processes and, operationally becoming more efficient. Also, the eyes will be on the order book of VPRO. Now, unlike its peers like TCS, Infosys and HCL Tech, VPRO has not landed any major deals in the quarter gone by. So the expectation is that the TCV, the total contract value in the previous quarter, will be overall muted for the company. Also, TCS's revenue is expected to be impacted by weakness in the BFSI segment, which is a major contributor to its revenue. And also there is expectation that the consulting business of the company will continue to be weak, in this quarter as well as the next couple of quarters, given that there is a cut in discretionary spending, especially when it comes to smaller projects. So what we are seeing playing out in the US, where it gets the bulk of its revenue from, that they are reprioritizing their projects, cutting down on the smaller discretionary spends and focusing on core business, and that is hurting the businesses of IT companies, including VPRO.
All right, and without a substantial order book to look ahead to, perhaps the upcoming quarters could be difficult for VPRO as well. But moving on to Bajaj Auto, Bajaj Auto will also come out with its set of numbers. What are the expectations?
Now, Shweta, as far as Bajaj Auto is concerned, revenue figures are expected to be muted, whereas profitability is expected to improve, given that commodity prices over the last quarter softened. The product mix is better. Also, we saw a price increase across multiple offerings from Bajaj Auto. Now, revenue is expected to come in at around 10,922 crore, which on a quarter-on-quarter basis will be higher by about 6%. On a year-on-year basis, it will be about 7% higher.
Okay.
Net profit, on the other hand, is expected to come in at around 1,780 crore. On a year-on-year basis, this will be about 14% higher, and on a sequential basis, we can expect a jump of about 7%. EBITDA margin is expected to improve substantially by about 222 basis points from the year ago period, while sequentially we can expect an improvement of about 50 basis points. So as per the estimates, margin is expected to come in at 19.5%. Also, we have seen that the sales volume, we can expect a decline in sales volume. Now, this will be because of the base effect. Now, if you remember, last time around, the festival season came in early. So in the Q2 results also, we saw that pent-up demand showing up. However, since the festive season sets in late this year, we are not seeing that extra sort of a demand trickling in for Bajaj Auto. And if you are talking about the stock, Shweta, the stock has been an underperformer compared to its peers like Hero MotoCorp and the likes of Eicher Motors as well as TVS Motors. In the last year to date, the stock has rallied about about 40%, whereas other stocks have rallied about 70 to 80%. In the last 5 days, we have seen a good run up in the stock. Over the expectations that the result will perhaps be not as bad as some analysts are factoring in, and the stock has actually rallied by about 1.5% or so. Even this morning, the stock is up about 0.5%.
Okay, so which essentially means that on the back of a great product mix, higher margins could be expected since earnings season is also kick-starting, as well as the festive season which kick-starts now.
And
so
price
perhaps
hikes
for Q3 and price hikes also will factor in perhaps in the Q3 numbers. If it's not a very good second quarter for Bajaj Auto, it could be a good quarter. The upcoming quarter, perhaps something to look out for as far as Bajaj Auto is
Yes,
concerned.
also the management commentary will be keenly eyed. Now I was reading reports where the management was hinting that they might launch or may consider a launch of a CNG bike
powered
in the
bike,
next CNG powered bike in the next few quarters. This could be this will be a first of a kind.
Game changer,
it could be a game changer, considering that we have not seen any sort of a alternative fueled bike or a scooter or in the two-wheeler segment. So this could be a game changer for Bajaj Auto going forward. Although these are just reports as of now, there is no confirmation from the management, but I mean the talks are there and we are seeing the effects of it playing out in the stock price.
All right, so investors upbeat about Bajaj Auto report card for Q2. Remember, this is the preview. Results will come out today. But shifting focus to IndusInd banking sector as a pack. Banking pack has been under a lot of pressure in the last couple of days. How's the stock reacting? What are the expectations as far as numbers is concerned?
So Shweta, the net profit figure is expected to increase by about 14% on a year-on-year basis and come in at about 2,128 crores in Q2. Net interest income is expected to decrease by increase by about 19% year on year and come in at about 4,896 crore. NIMS, although is expected to, which is the net interest margin, it is expected to compress slightly by about 14 basis points on a quarter-on-quarter basis.
All right, and before we move into Kush has joined us on the show. Let's also quickly take a look at the Mindtree expectations. L&T Mindtree would also come up with its results later today.
Yes, Shweta. So along with VPRO, another IT major that is coming out with the results is L&T Mindtree. Unlike VPRO, the stock has done fairly well. On a year-to-date basis, it has outperformed Nifty IT, but it is expected to report a muted set of numbers on both the revenue as well as the profitability front. Now, revenue is expected to decline by about 1.6% on a quarter-on-quarter basis, driven by a sequential improvement across verticals, but profit after tax could decline by about 5% on a Q-on-Q basis. What we'll of course look forward to from the management will be the as far as demand outlook is concerned, we'll also eye the management's views on it, as well as the signs of merger related synergies that are playing out after the merger of LTI with Mindtree. Deal wins and the nature of deal wins are also expected, because if you remember, when we got the results of the IT bigwigs, most of the the deal wins were longer duration contracts. So the conversion of those deals into revenue will play out over a few quarters. So I mean, management commentary on that regard will be closely eyed.
All right, that is of course as far as earnings today is concerned. Kush Bora of kushbora.com joining us here on the show. Kush, great to have you back. Welcome to the show. Let's quickly begin with how markets are opening this morning on a slightly flattish note. Obviously on the back of a subdued closure of US markets and various other global indices. What are you picking up as far as markets is concerned? What factors will you be eyeing today?
Hi guys, first of a very good morning and thank you for having me on the show. Always a pleasure. Well, I know it's a flattish kind of an opening, but we've sort of recovered from the lows of the day, even if it's just been like half an hour. I'll take it with both hands because 19,800 is a very critical level for me. As long as we're holding above this, the bias will remain positive, and if we close above 19,850, that's when I think we'll probably make that move towards 20,000, 20,200. The new highs will also be on the charts. So for me, this is a very important zone. if the geopolitical pressures weren't like a hangover, we perhaps would have already kind of made that move. So considering the fact that even with those kind of pressures we are holding above 19800, it's a very good sign. My concern is bank nifty. After the HDFC Bank move yesterday, it's sort of slipping again. Even HDFC Bank's not held on, and quite rightly so. If you speak to fund managers, if you talk to some HNIs, if you talk to analysts, the general belief is that the first set of numbers were mixed, and we'd probably wait for at least one more quarter, if not two, to see how the how the numbers stack up, just to get an idea of whether the near term bottom is made from an investment perspective or not. So as long as the bank nifty does not participate, if it does not cross 44,600, then perhaps nifty could be a little sluggish, and look for support from the likes of auto and IT. So bank nifty participation is crucial. But that said, for me, overall the setup looks positive right now. Bank nifty might consolidate, nifty on a positive footing, and there's a plenty of action in the mid cap space. So all in all, a good time sort of to be in the markets and do cherry picking.
All right. A lot of action there. And before we move into the action, I also want to quickly get your views on what's happening on crude front. Crude at about $91.82 a barrel. It is inching up with each passing day. It appears that the war in West Asia, along with other factors, are critically, crucially playing into the crude prices. How is that likely to impact market sentiments?
But we'll definitely see the near-term impact. And when I say that the geopolitical crisis is hangover, where that has sort of propelled into the crude oil spike and then into the in the stock prices. So that's how we're very clearly seeing that kind of an impact. We've seen a bit of a bump up in the crude prices for the last week or so since the conflict started. So that will perhaps in the near term be a bit of a hangover, but I don't see too big a worry on the crude front. One of the reasons for that is the fact that these conflicts are haven't at least historically haven't been long lasting, and once the resolution is reached, then you would see that the conflict premium on crude sort of subside, and we could perhaps go to those 85 odd levels fairly soon, but that remains to be seen. So as I said, in the near term we do see this as a bit of a bump up, but I wouldn't press the panic button just yet.
Okay. Now, Kush, we are in the midst of the earnings season. In fact, in the second week of the earnings season, first it was the IT companies. Now we are seeing a lot of banks coming out with its reports. So far, in your mind, how would you review the Q2 report card of India Inc.?
So far, the results, according to me, have been a mixed bag. If you see HDFC, as I said, perhaps posted, mixed set of numbers. From the IT space, TCS was a bit of a disappointment, but HCL Tech and, the likes have sort of posted decent numbers. The smaller banks are sort of starting to post decent numbers. So it's a bit of a mixed bag. Now, the fact is that, they haven't really been disappointing, fairly in line or maybe near miss at some of them. And hence, the confidence in the Indian stock markets. If you see, that is perhaps why the markets haven't really given way. A couple of heavyweights are already, out in terms of the results, and the markets haven't given way, which means the street is also taking this positively with a pinch of salt. So I wouldn't read too much into it, although I would have loved a couple of more positive surprises from, the likes of HDFC and TCS. That could have perhaps been the much needed shot in the arm.
Okay. And what about the banking pack? Now there was, of course, chatter that NIMS will come under pressure in the results from Q2, but I mean, looking at Bajaj Finance's results, the NIMS have contracted, like about 14 basis points, whereas the street was factoring in a correction of about 30 basis points or so. So the higher cost of fund narrative that was playing out in the street, how much of a factor is it going to be forward, and is it a factor at all?
So I don't quite track these closely from a granular perspective. When you talk of the NIMS per se. But if I look at the overall performances, look at the kind of move that we've seen on Bajaj Finance for the last few months now. The street was factoring the kind of recovery, and the fact that it's not sort of disappointed in such a big way is also an indicator. Now, we did sort of see a dip today, but the recovery was equally sharp. So for me, any kind of dip that would come in because of this quarter results on Bajaj Finance will turn out to be a buying opportunity. I wouldn't be surprised to see 8,300 plus kind of levels on this stock in the near term going forward. As far as the rest of the banking pack goes, if I just shift the narrative a little, most of the stocks, including the likes of HDFC, ICICI Bank, even SBI from the PSU space, are trading very close to their support zones. Now, any kind of an uptick here will be a positive welcome from the bank Nifty perspective, from the overall banking perspective, but somehow they've sort of not delivered yet, and hence I'm just being a little cautious on the bank Nifty. So banking pack is on my radar. I'm just awaiting a breakout on a couple of these names, but haven't really gotten it. So yeah, that they just remain on the wait and watch list for now.
All right, so
Now,
banking pack on the radar.
yes.
I also want to quickly talk about, apart from banking, IT pack, which continues to come out with its results. Wipro set to release its numbers, and my colleague ran us through some of these numbers. What stands out is, in fact, the deals that Wipro has signed up or signed in the past quarter as compared to its peers. They're not large sized. In fact, they're not many as well in volume. What sort of impact is that likely to have on Wipro, not in this quarter, but perhaps in quarters to come from here?
So let me combine a couple of narratives here. One, the fact that we've seen that the execution challenge is sort of starting to play out on some of these deals. These deals typically have a long gestation period, so it might perhaps take some time for the companies to deliver, and we don't know what the geopolitical, or rather what the global economic landscape is going to be by the time these come into delivery. So that is one thing that I will have a very clear view on as far as the deal space is concerned. And from a second technical perspective, this stock, I've said time and again, has not been our top pick in the IT space. If you look at the likes of TCS and Infosys and HCL Tech, they form our picks from the large cap space. Coforge, Persistent, they form our pick from the mid cap space. So we sort of jump the gun on Wipro when it comes to having a very strong positive view. So yeah, that's how I read it. Overall setup perhaps looks a bit of a upward bias, but nothing breakout or nothing breakaway for me on Wipro just yet.
Now, Kush, there was also a report coming in this morning that the government may plan to, offload some of the stake in PSU stocks, given to meet the minimum public shareholding requirement of about 25%. Now, given the kind of returns that we have seen from PSUs, 200 a lot of them have turned multi-baggers. In fact, if you see the 1-year returns, IRFC, for example, has given a 273% return. Ercon has given a return of 280% or so. And we have also seen that, in the past, in the last couple, I think in the case of SJVN and HUDCO, the offer price was below what the market price was. So in light of that, would you recommend perhaps booking profits from the PSU stocks?
And talking about PSU stocks, I think it warrants a larger discussion, because the government has been pushing for PSU stocks for a while now. We heard Prime Minister pushing for PSU stocks, stating very categorically that the returns on PSU stocks are in fact better than many profitable private companies. In a sense, it was a call to invest in PSU stocks at this point in time, with many of these returns at an all-time high. Kush, are you of the view that one should stay invested in PSU stocks?
Look, without being political, if I can just put it this way, it's the management premium in a lot of these PSU names that has started to kick in, right? I mean, we've seen these stocks perform in the last 5-7 odd years. Now, they've been a story for a very long time. People didn't almost believe them. My belief comes from the fact that the longer people are in disbelief, despite the last 5-7 years of performance, the higher these stocks will go. But that said, if you are an investor, even from a medium-term perspective, it's not a bad idea to take some money home, right? Because at the end of the day, profit, money in the bank is better than profit on the on the books. What I suggest is take some money home, but not completely, because if you see some of these PSU names, the power space, the defense space, they seem to be in a structural cycle. The PSU banks also, so as long as the management, sort of remains the same, then you will perhaps see, these reforms continue and these stocks performing even well. So I won't be surprised that if these stocks sort of move higher from these levels also, despite the kind of move that we've seen.
So they
My
can
suggestion
move
would
higher.
be,
There is a
absolutely
room to
take
move
some
higher.
Longer term view
take some money
remains
home
bullish.
and take some money home, keep some in the portfolio. Not a bad idea at all.
Okay, lovely,
Book profits
wonderful.
partially, keep the view on the bullish side. I mean, as Kush said, the longer term perspective remains good for the PSU stocks.
All right, longer term perspective remains good. Before I let you go quickly, Kush, what sort of impact are you expecting of earnings season on the markets? So far, the response has been sort of muted, if I would say so. Would you agree with that assessment?
And last time we saw that market scaled a record high, in the last
Absolutely.
earnings season. So do you have any sort of expectations on that regard?
Oh, I do, and I see a lot of that, already priced in. You're right. It's been a bit of a muted sort of. I would rather call it a mixed set of numbers yet. We would have loved a few positive surprises, but I think going forward also we could see this trend continue. Some names perhaps popping up positive surprises and
Okay.
some not so great. So I think this mixed trend would perhaps continue at least for this quarter. But as I said, a lot of that is already being priced in.
Right.
For me, the fact that we're holding up above key levels is a very positive thing. I'm eyeing levels of 20,200 by the end of maybe the next month, or perhaps the one after. So Diwali, or maybe just after that, we could be looking at the new highs on the market.
Okay,
yeah,
so wait until Diwali. If you are looking to make fresh investments, perhaps wait until Diwali, because that is when the markets could scale another high. Kush, thank you very much for taking time out for joining us here on this show.